Well, let's kick it off then in terms of how things are looking as we focus and refocus back on the markets, right? I mean, we're trading. It may be the last trading session of 2022, but I have to say this. I mean, it's been uncharacteristically, lively, the markets. Volumes may have been dull and you can complain about that, but price action has been lively. Now, strong pullback is what we've seen overnight in U.S. equities. You've got the S&P, which is up strongly. You've got the NASDAQ, which is up strongly. And what is this on the back of? It's on the back of weekly jobless claims, both initial and continuing claims, which came in line with expectations, maybe a little softer than expectations. Markets coming off kind of depressed levels, volumes are low, pointing to this data point and saying, well, the economy and labor market particularly, right? I mean, the number one problem for the Fed has been the fact that labor market still is very, very strong, even as other parts and other indicators are starting to slow down. Skeptics would still argue that these are weekly numbers, right? I mean, so in a week, anything can happen. So should you rely so much on it? But for what it's worth, last night we saw a reaction to this. Yields were lower. The 10-year was down 6 basis points. Dollar, that's under the 104 levels, the dollar index, that is. On the Nifty, we find ourselves, in the Indian context, we find ourselves in a pretty interesting juncture. So the Nifty retested the trend line from the June lows and actually closed above it. Actually, we'll put out a chart at the end of it which kind of explains this. So 3 numbers to watch. The trend line level now is 18,230. I mean, where today, because it's a rising trend line, so today as compared to yesterday is a little higher. So 18,230 is point number one. The next is the 50-day moving average, which is a little higher than that, 18,250. So that's a 50-day. And then you basically have the 50% retracement of the entire fall from the all-time high of 18,887, which was made on the 1st of December this year, to the low on Monday, that is the 26th of December, this Monday. The 50% Fibonacci retracement is 18,330. So 3 kind of levels on the upside to watch. On the trend line, 18,230, then you've got the 18,249 level, and then you've got the 18,330 level. These are all near-term kind of indicators, and the market has been trading beautifully, within this kind of framework, retracements and moving averages. Bank Nifty is looking much stronger. As of yesterday, it is already closed above its 20-day moving average and the 61.8% retracement of the entire fall. I mean, so when an index does this, you basically are, the bearish signs are over, at least for the Bank Nifty, I would say, and things should look up. Basically back from where the market fell is what I would say. Now to the charts, which I think beautifully explain the story. The first one is that trend line I was talking about, all the way from the lows of June. 15,183 was the low on the 17th of June. There's a touch point on the 30th of September. And then you look at what happened. There was a breakdown below this 5 or 6 sessions back. As of yesterday, I don't know if you can kind of see that, but we closed above this level yesterday, above that trend line. So, the fact that the market is above it does give confidence, although bulls would want that level to hold. The second one is that retracement I was talking about. I don't know if it's very visible, but the one to watch, the one you want to watch is that the horizontal line in between. It's a retracement, as I said, from the all-time high to the low that we saw on Monday. And the 50% retracement is the middle horizontal line, and that number is 18,330, which is the next kind of resistance to watch out for. In between where the market closed and that 50% retracement, as I said, is the 50-day moving average, which is very, very close by 40, 50 points away from here. So just chartically speaking, as they say, picture is worth 1,000 words. And it does do the job of kind of reinforcing some of these levels. Sonia, hi.
Hi, morning. And, since it's the last day of the year, we must sort of reflect on the year gone by, right? India has had a big degree